With the life insurance company, we have the ability to do what we want because we become the banker. That can be good and that can be bad. Sometimes it's bad because you should not be in control if you don't put your banker hat on and start thinking like a banker. In the world of farming, we need to think like business owners. We need to think like bankers. We need to think like farmers, right? We have to be the person that manages all of that stuff. Hello, 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 and welcome back to the podcast. Thank you very much for being here. I appreciate it. All right, so let's talk about today why you would use whole life insurance if you already have equity in land. I've had this question a couple of times, but this is kind of where some people get stuck because of the fact that they are like, well, I have land. Why would if I can just go to the bank and I can borrow from the banker and I can use my equity in my land to buy more land or to buy cattle or to buy whatever, why would I start funneling money into a life insurance policy and then miss out on some of the capitalization of it? So let's talk about a couple of things. One, let's talk about the capitalization piece because a lot of people, they're not thinking about that. And so if we're going to pay premium, we have access to about 70% of that premium in 10 to 30 days, depending on the company. The company that I use is 10 days. So we're going to pay our premium. We're going to turn around. We're going to borrow against it, use it for whatever we need to use it for. Okay. What happens is that when you pay a bank, let's say that you're going to buy land. And you're like, oh, Mary Jo, I don't have to capitalize that land. Yes, you do. Yes, you do. So if I buy land, which I just recently did, right? I bought land and I had to put 30% down. So you're going to need 25%, you're going to need 30, 35, just depending on the bank. That's how much equity they want in the land. That, my friends, is capitalization. That is no different than if you go to a life insurance policy in your first couple of years. Now, let's go down the road 10 years. And let's say, okay, well, Mary Jo, I'm still borrowing against my property and I'm still borrowing against my land. But guess what? The bank is still not giving you access to 100% of that. Now we're back into the life insurance policy. And guess what? You have access to a full 100%. Because what you put in your policy typically, depending on health and all the other things, is going to break even by year 10, anywhere between year 7 and 10, depending on how much you put in, your health, all that kind of stuff. So how crazy is that? For the life of our land purchase, we are going to have equity in there that we are not going to be able to get to without asking the bank for approval. Now let's move into that piece of it. Okay. So capitalization, let's just review. Capitalization is there no matter what. In the first early years of the policy, you are going to have to capitalize. In your land, you're going to have capital stuck in there forever. You are still going to have to capitalize it in the early years, 25 to 35%. Now let's talk about how accessible it is. So now there's some land for sale and we're going to go buy this land, right? But we don't have all the money that we need. So we are going to go to the bank, ask them for permission to use our paid off land, and they're going to tell us what rate they're going to charge us. They're going to tell us how we have to pay it back. Maybe we're going to get a 30-year fixed, maybe a 25-year, maybe a 20-year fixed. Maybe we're going to have a 5-year arm on that thing. We don't know, right? It depends what option we're going to get. But they're going to have to see our financials. They're going to have to make sure that we're making enough money to make the payment back. So it's some hassle. It's kind of a pain in the behind, honestly. And so what's our debt to income ratio? All the stuff. Now, here's some other things that we might have to look at is if we have to go back to the bank to value our paid off land, are they going to value it accordingly? I have had some clients, and not like a small amount of clients, but a fair amount of clients who have said They've gone to the bank, and guess what? The bank said, no, 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 it's not worth that per acre. We need to be very conservative. Why do they need to be so conservative? Because they want to make sure that their debt to income is okay. They want to make sure that their books look okay to the feds when the feds come in and audit them. They don't want to be so upside down that they're like, yeah, we didn't have enough collateral to all these loans we gave. So I've talked to people where land next door sold, and that land is $2,000 to $3,000 an acre more than what the bank is appraising it for. Okay. It could be 10,000. It depends where you're at. I suppose if you're in Iowa, they could be off by a whole bunch. It just depends. And so when we go to the bank and we use something as collateral, like land, like a rental property, like a vehicle, like a tractor, cows, whatever, they're going to, and let's just use cows as an example too. Today, they're going to use cattle prices at what they're at today, right? They might be a little bit conservative, but are they going to go back to where we came from, which was rock bottom at cattle prices? Probably not. They're going to be conservative, but they're not going to go to rock bottom unless, of course, they really are super scared you're not going to be able to pay that loan, right? So we have to consider the fact that we have all these variables when we go to the bank. And when we want to borrow against our life insurance policy, we just log in online, call the company, send a form over, sign it, answer a couple security questions. Yes, I own this vehicle. Yes, I know this person. Yes, I've lived at this address. Done. No questions asked. We're not going to ask how much equity you have in the land because it's whatever the cash value is what you can borrow. That's what's available to you. It doesn't have to be, it's not 80% of the value or 70% of the value. Whatever the cash value is, you get to borrow all of that. After years 7 to 10, remember, there is more cash value in that policy than you paid in. As long as your health is normal. That differs if your health is poor and you have a poor, a worse health rating. The lower the health rating, the longer some of that stuff takes. But that's not often that happens. Even in that case, it's year 13 to 15. Year 13 to 15. You're still borrowing more than what you've paid in. Okay? Is that very similar to if I own land or if I own a rental property that it has increased in value, right? So now I can go back and get more of it. Yes, but you have to have the land and the rental property appraised. So let's just use me as an example again. We have a rental property that is paid for. Okay? If I wanted to borrow against that rental property, which I have asked to do, I have never done it, but I have checked with the bank to say, oh, hey, what if I want a line of credit? Oh, they're not hardly valuing that at all. So if I had a line of credit, I had at the time, I wanted a $500,000 line. Okay. But we had 6, 7, 8, we had about $850,000 of properties that were paid for. I wanted a $500,000 line of credit. Didn't know if I was going to use it. No idea. They said, okay, we need both of those properties as collateral. What? Excuse me? I want $500,000 and you want both properties? No, my friend, that's not going to work for me. Nope. Especially when interest rates were like 7%. So I will just go to my policy and borrow from my policy, or I will wait until I absolutely need to come get a line of credit. Because the other thing I said is, what would my origination fee be on that line of credit? Oh, it was going to be like $5,000. $5,000? No, thank you. No, thank you. I don't have to pay any kind of fee to the life insurance company if I want to borrow money. None, zero, zilcho. Now, could I still go to the bank and use my life insurance policy? Well, absolutely, I could. Absolutely. But let's just rewind, getting a little bit down a rabbit hole here. If we are trying to say we don't understand why we're capitalizing a life insurance policy, because in real estate, we don't need to capitalize and we can continue to go back and borrow and borrow and borrow. Yes, you can, but you're capitalizing both things. It absolutely does not matter. This capitalization piece is so crazy to me that people are so concerned about it. Think about this. We are concerned about capitalizing a life insurance policy when we capitalize land, like I just explained. We capitalize our 401k until we're 59 and a half. Okay, we don't get access to that. We capitalize an IRA till we're 59 and a half. We don't get access without penalty, right? I wish that I could say, oh yeah, you're understanding it. Nope, we're not understanding it. So you might, if you have read the book and you are stuck on this one thing, let's get you thinking a little bit differently and let's put it into perspective. But we might need to go back and reread the book. Sometimes we don't get everything the first time. I don't. I know that for certain. So maybe go back and read the book. Read Nelson's book, whatever that takes. But today I just wanted to talk about the capitalization of the life insurance policy and why that is not the same with land to some extent, right? Capitalization piece is the same, but how we access the equity of that is not the same. I hope that all made sense. I mean, there's other things to talk about here, but as far as the capitalization piece, I want to just stay on that topic and not get down rabbit holes. You're welcome. You're welcome. Okay, you guys, let me know if this has been helpful, if you have questions about this, because I really do feel like this piece of it is where people are like, no. The life insurance company is getting rich. Well, it's your company. So if I make my company rich, then by all means, let me do so, because I don't frankly care. It's my company. I'm going to get a dividend at the end of the day. But the insurance company needs to have the money to pay the death claim. I don't know why we forget about that. Maybe because enough people aren't talking about it. But let's keep in mind that it takes the insurance company about 15 years to get to a break-even point where they have made enough to pay your claim. So if you die within the first 15 years, not good for the insurance company. Okay? That's why we have underwriters. That's why they're so picky about everything that they do. But there is a cost to the death benefit so that the company can stay around forever. Okay? So think about all of those things. Why does the bank want you to have 25 to 35, 40% equity in that land? So if the land prices drops, if you can't pay, they have the ability to sell it and make a little bit of money on it. That's why. So when you are looking at comparing both things, the one thing I didn't mention is in the life insurance policy, if we're going to borrow money, we can pay that back however we want. You can pay it back yearly, monthly. You can make interest-only payments if you have a bad year. Everything is super flexible. If we're borrowing it from the bank, they're going to tell us how we have to pay it back. That's why we have to justify that we have a job to make that payment, right? With the life insurance company, we have the ability to do what we want because we become the banker. That can be good and that can be bad. Sometimes it's bad because you should not be in control if you don't put your banker hat on and start thinking like a banker. In the world of farming, we need to think like business owners. We need to think like bankers. We need to think like farmers, right? We have to be the person that manages all of that stuff. And so it can be good and it can be bad. Sometimes we do better when people tell us what to do, but then we get mad when people tell us what to do. So, there's that. Human nature. Okay. Let me know if you have comments, questions, concerns. I'm happy to answer any of those. I hope that this helped. Kind of feel like I was talking in circles, which I feel like I always talk in circles, but apparently you guys keep listening. And so I appreciate you. I do. Okay, let me know. Otherwise, go get your book, Farming Without the Bank. Happy to bring newbies in, right? I appreciate you guys if you share. Okay, you have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.